Good afternoon. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me, as always, is Vivek Iyer. And you can call it a resilient session, Vivek, because it's not as bad as it was feared, particularly after the meltdown that we saw on Wall Street overnight.
Absolutely right, Hormaz. We saw meltdown in Wall Street. We saw a gap down opening, but after that, what we've actually seen is a significant recovery from the day's lowest point. The small cap index continues to sulk, but the Nifty has managed to hold out above its head above the flat line, and the mid cap index absolutely flat as we start the show at 1:30 p.m. But we have quite a lot lined up on the show. Let's start off with the top headlines. Stocks trade just a tad softer despite the carnage in U.S. equities overnight as fears of a recession in the U.S. start to blow over. Realty is the biggest gainer even as IT drags. Banks under pressure due to IndusInd Bank, mid-caps at par.
Oil marketing companies are in focus after crude oil prices continue to weaken due to demand concerns and ample supply. Indian Oil Corporation has gained over 1%, as have their peers.
HEG surges in trade on the back of proposed value unlocking in Bhilwara Energy, in which it owns 49%. Bhilwara Energy has approved the fundraise of up to 500 crores.
Tata Communications, another stock in the broader markets that's bucking the trend after ICICI Securities upgraded the stock to a buy and a target of 1,840 rupees. It said that core connectivity, free cash flow and digital service potential is undervalued. Absolutely flat as flat can be, but as Vivek was mentioning, the broader markets, they were the ones that were in pain yesterday. They continue to do so in today's session as well. Of course, can't not talk of IndusInd Bank, even though the show is focusing on mid caps. 26% lower now on IndusInd Bank, almost 20,000 crores of market cap gone in a single trading session. But we'll get to that as the show goes on. There are plenty of other movers that you need to watch out for in the broader markets, and Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. The mid-cap index specifically has been flip-flopping between the red and the green. Let me first look at the stocks that are declining in trade today. This list includes Sapphire Foods. There was a management meet. The stock is down nearly 5%. Nuvama Wealth continues to be under pressure, down nearly 6%. There's another stock from the capital market theme, which is BSE. That stock also languishing in trade as of now, down nearly 5%. Triveni Turbine continues to decline, down nearly 6%. The defense pack as a whole is also seeing a fair bit of selling pressure today. BEML is down nearly 4.68%. We also have Data Patterns, which is declining by 3%. Idea Forge, Garden Reach, Shipbuilders are some other counters that are down and out in trade today. We also have banks apart from IndusInd Bank dealing under pressure. Bandhan Bank is down nearly 5%. AU Small Finance Bank trading near the day's lowest point, down 3.5%. The same for City Union Bank, down nearly 5%, and IDFC First Bank also down and out in trade today. On the flip side, the Nifty Realty Pack is really picking up pace today. It is the top sectoral gainer. Macrotech developers trading close to the day's highest point, up nearly 5.5%. We also have Phoenix Mills, which is surging by nearly 4% today. Godrej Properties as well as Oberoi Realty also making a mark in the trading session today. Let's also look at some of the top gainers today. Chennai Petro is one such counter. Indegene, both of these counters are up anywhere between 7 to 8%. Tata Communication also has gained momentum throughout this trading session, up nearly 8% as of now, and Tube Investments also trading higher by nearly 6.5%.
Thank you so much, Vamakshi, for joining us and giving us a sense of what exactly is transpiring as far as the broader end of the markets are concerned. Well, a couple of stocks, the Hinduja Group stocks, like you just mentioned, these stocks continue to witness selling pressure. Ashok Leyland near the day's lowest point, almost 4% lower as far as Ashok Leyland is concerned, and the mid-cap banks, like you highlighted, these stocks too seeing significant selling pressure. But let's now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Stay tuned.
Welcome back. At the part of the recovery that we've seen on the Nifty is because of the recovery that we have seen in a lot of these IT names. Remember, these IT stocks sold off in the early part of the trading session after the sell-off seen on the Nasdaq overnight. There's some bit of recovery seen on Infosys, still 3% lower, the top loser on the Nifty IT index. TCS has come off the highs of the day, but stocks like LTTS, Wipro, Tech Mahindra, Coforge, LTI, Mindtree, all of them recovering from the lows of the day, but continuing to trade with losses in today's trading session. On the flip side, though, a sector that has done very well in today's trading session is real estate. It was the worst performing sector in yesterday's trading session. It's continuing to do, and on the flip side today, it's recovering most of those losses today. The realty index is up almost 3% now in what has been an otherwise wobbly and choppy market, nearing the highest point of the day, and a lot of these constituents doing well. Macrotech is up almost 6% now, the top gainer on that index in today's trading session. Phoenix Mills too. The Phoenix Mills has been in the news. A lot of these consensus analyst estimates are preferring Phoenix Mills over a lot of these real estate developers. Phoenix Mills too up almost 5% in today's trading session. But another stock that has bucked the trend in the broader markets has been Tata Communications, and that is on the back of a double upgrade that has come in from ICICI Securities. Rima is here with more details on that. Rima.
So ICICI Securities has double upgraded Tata Communication to a buy from a hold. Target price stands at 1840. Risk reward, according to them, is compelling. That's because of the kind of free cash flow that the company is generating in the core connectivity business, and even the digital services potential is undervalued by the market right now. Remember, the stock has taken a hit. It's down more than 32% from its recent high. Now, they're saying the data revenue business was hit in FY24 on account of the Red Sea issues. But now that is resolved, and the order book for the company is in double digits. So that portfolio is going to do well. Also, in terms of the core connectivity business, they think the free cash flow is going to be to the tune of 3,300 crore, and that is pretty substantial. Now, yes, the company had laid out very ambitious plans by the end of FY27. It was a 4-year plan that the company laid out in FY23. They wanted to double their data revenue from 14,000 to 28,000. That the company says, ICICI Securities says looks ambitious. It's unlikely they're going to meet it. The target may have to be pushed forward by 1.5 years. But on the other metrics, like on their guidance on margins, the guidance on debt, the guidance on their return ratios, that is more or less likely to be achieved. So there's a sharp focus by the company on capital allocation without compromising on the growth investment. So ICICI Securities is quite bullish now on Tata Communications after the recent correction.
Thank you so much, Rima, for joining us and giving us a sense of what exactly is transpiring at Tata Communications. The stock up over 8%. ICICI Securities finds value at the current levels, and the stock has been double upgraded by them, and on the back of that, over 8% higher. The other stock that has seen a significant comeback from the Tata stable is actually Trent. Yesterday, this particular stock was down over 2.5%, and this was on the back of a downgrade that came in from Kotak Institutional Equities. But today, the stock has seen a significant rebound, and the stock is up over 4%. The other set of stocks that Hormal just mentioned was actually the real estate pack. And the real estate pack, look at names like Lodha, look at names like DLF. These are some of the stocks that are seeing significant buy. Okay, well, we have a very important conversation lined up. Ashok Hinduja, Chairman, IndusInd International Holding, joins us on the line, and Ritu joins in from Bangalore for this particular development.
Well, thank you, Vivek. IndusInd Bank has been in the news for all the wrong reasons of late, especially after disclosing the discrepancies in their derivative portfolio, on the back of which you've seen the stock falling nearly 25%. And this comes just a few days after the CEO, Sumant Katpalia, only got a 1-year extension as opposed to the 3-year that the board has sought. To address this, we have with us Ashok Hinduja, who is the chairman of IndusInd International Holdings with us. Mr. Hinduja, thank you very much for taking our call and for joining us here. Just quickly wanted to start by getting your reaction. The CEO getting that 1-year extension, closely followed by the disclosure of this issue when it comes to the discrepancies in the derivative portfolio, nearly 6 months after the management had discovered it. So the street is calling this a credibility issue. What do you as a promoter make of this, and were you aware of the issue to begin with?
Vituji, thank you for taking this interview. Let me tell you, the banking business, as you are aware, is in lending and borrowing. Globally, at various times, the banks face the problem much bigger, 5 times, 6 times the size of this bank. They have seen these problems. As rightly asked, Whether I am aware, yes, I am aware only now when I have come to know. Because me as a board, I am not a board director, neither I am a management. So this question, why they came to know, when they came to know, why they have not corrected and not informed, it will be very difficult for me to answer that question. But I can tell you, our trust and confidence in the board and in the management is very strong, because we have seen, IndusInd Bank has seen in last 30 years various problems, and it has all been handled properly by the boards as well as by the MD and the management then. And this problem will get resolved, because as we see, their financial numbers are very strong. As you know, the operating profit for 9 months is 11,000 plus crores. The hit of this 1,500 crore or 1,600 crore is not much. And these are derivatives, technical difficulty problems, as we understand. So they'll be able to take it. And my suggestion and request to the shareholders is that they should not get panicky about this. These are normal routine problems. But yes, I understand that their concern is that why they were not informed earlier. It depends, it all leaves the intention and the integrity of the institution. And banking business is the integrity, trust and faith. And I'm sure they may be having some difficulties, some problems. It only the MD can respond to this, which I think he will definitely do it. But there is nothing wrong in their system or in their management. Some professionals, somebody must have done some error, technical problems, which we don't know. So as far as the promoters are concerned, we have full trust, and our support to the institution will always be there.
Mr. Hinduja, you said, you support the management, you support the CEO, you say the financial hit is not very large, but what the street is very much concerned with is the credibility issue. And as you yourself alluded, it's not just this derivative portfolio discrepancy that has come to light. Just before this, we saw the Reserve Bank of India only giving the CEO a 1-year extension versus a 3-year that was sought. Before that, in the past, we saw the CFO resignation. Even before that, in 2021, there was that issue of the microfinance subsidiary and the glitches thereof. So that be the series of issues that investors have been concerned with. Do you not believe that there have been lapses at the management's end?
See, as I explained to you, the bank is in business of various different segments. Microfinance is one. Microfinance, the business of microfinance, as we all understand, depends on the seasonal, on the political election basis, state-wise. They face problems. As far as the management is transparent and he has given the provisioning that there is a problem, the more transparency he has given, the more market has hit him bad. So I am myself astonished that whenever a management is giving a provisioning and seeking that, yes, we will look into it, there is a problem, market should, on the contrary, appreciate that the management is transparent to come out and make a provision. It's not, as I read in the papers, it's not only once. They have done the provision in Q2. They have made a provision in Q3. And now this also, the problem which has come out, has not been identified by anybody, neither the auditor, it is the management which came out and brought to the attention and disclosed it. So as far as we promoters are concerned, yes, these problems have happened, and in this such a type of institutions, it will keep on happening in many other banks also. But we should give opportunity to the management to clarify these situations when they come on the media.
Well, we hope, Mr. Hinduja, that the management will come on and clarify this further because, you know, the stock has erased, almost 18,000 crores of market cap on the back of this news. And like you say, transparency and trust in banking is very, very important. And there has been a near 6-month delay in making this disclosure. So what are you going to say to investors that there will be no more such shocks in store? How will you allay these concerns?
See, as I told you, I'll not be able to answer this because I am not into the awareness of that. So when Mr. Suman Katpalia may come for interview at your channel or some other channel, these questions should be put to him, and I think he will have fair answers to respond to that.
But Mr. Hinduja, as the promoter, now currently the hit is estimated at anywhere between 1,500 to 2,000 crores, while the capital adequacy is comfortable at 15.18% Tier 1 capital. If needed, will you as a promoter look at further capital infusion into IndusInd Bank to support them?
Okay, let me also add to this. Now it's more than 30 years this entity bank has come into existence. 3-4 such cycles have come. It has come in 2008. It came later in the post-COVID time. Always we as promoter have supported irrespective of the pricing. If you recollect, there was a capital raise by the bank when the warrants were issued at 1,700 rupees, when the market was 1,900 to 1,000 rupees. And the market was saying the promoter will not invest. But we proved the promoters invested irrespective of the more than 40-50% price difference only to support the bank. Today also, after this provisioning, as I understand, the capital adequacy will still be over 15%, wherein minimum requirement for any bank as per the regulator is 12.5% to 13%. But irrespective of this, as and when further capital is required, promoters, shareholders are high net worth, global shareholders. They are always with the company since last 30 years. They have not exited. They have neither sold their shares. They are seeing long-term opportunity, and also they are pushing to the company, to the board, that please come for more opportunities. And that is how we invested and went through the insolvency route of the Reliance Capital. As you are aware, was also successfully achieved. And you may be knowing only yesterday, 26% the Indian part equity has already been fulfilled, completed, and 2,500 crores for the 74% equity also has been injected, and hopefully this transaction will get completed 100% by this Thursday. So total transaction is of 10,000 crores.
Yeah,
So
well, Mr. Hinduja, we'll come to RCAP in just a bit. Yeah.
As far as
We'll come to RCAP in just a bit, Mr. Hinduja. But first, on IndusInd Bank, a couple of years back, IndusInd said there was an in-principle sort of, approval from the Reserve Bank of India for the promoter entity to hike its stake from 15 to 26%. About 1.5 years or so have lapsed. What is the status on that? Why the delay in hiking stake if, as you said, you intend to increase it?
Okay, let me also add to this. We have got the approval letter in the principle that as a policy you can increase from 15 to 26%, and we have to follow the process, which we have followed the process. Form A is one of the processes which we have filled up, provided all the correspondences, anything whichever their queries were there have been answered. Now it is left to the regulator as and when they think proper to provide. And once we get the approval, we will immediately increase and put injection of the capital into the bank as and when they require.
What are the conditions exactly, Mr. Hinduja, that the promoter... Actually, Mr. Hinduja, what are the conditions that you have to fulfill for RBI to give you that final approval to be able to take your stake up to 26%? As we understand, the shares also have to be unencumbered, and about 50% of your holding currently is pledged.
Let me explain to you. If you go on the net has a form which regulator gives to any bank who wants to increase their holding. So, for me to provide all those details will not be proper. There is a form which has to be fulfilled as one of the conditions, which has been done and has been filed, and any queries on that also has been provided.
A timeline, Mr. Hinduja, as to when you're expecting that final approval to take the stake up to 26%?
Sorry to say, that is not in our hand. We can only request the regulator to expedite. So as and when they think is right to clear it, they will clear it. Maybe after this interview.
Okay, Mr. Hinduja. Yeah.
Maybe after this.
Nearly 50% of your.
You may be.
Yeah. Sorry. Go ahead.
Good enough to raise this question, and we may get the approval in few days.
Well, we'll wait to hear on that, but 50% of your stake, Mr. Hinduja, of the promoter entity is currently pledged. Given the fall in the share price that we've seen on the back of this news, have there been any margin calls?
No, at the moment there is no margin call. And second thing, why it is pledged? You see, IIHL is a holding company. IIHL is a holding company. It has over 600 shareholders. There is no business in IIHL. It only depends on the dividend and the valuation and the NAV of the company. So the shareholders always push to the board and to the management that why don't you create further value? Why don't you go for more acquisitions? Which we have done. This is how the BFSI sector has come in. So whenever such opportunities come and short-term funding is required, if they have raised any pledged shares, at an appropriate time, those shares also will be depledged. So the pockets of the shareholders and the pockets of the IIHL is very strong. I can assure you that.
While that, be that as it may, Mr. Hinduja, the stock is now down 25%. I just wanted to understand if there would be a need to create more pledge at all.
No, the question is, you see, this is again depending on the management of the IIHL, what they think is appropriate. They also understand that they are in the BFSI sector, they are in the banking, they have to be very cautious and careful. And at an appropriate time, whatever they think right, they propose to the board. Board thinks it is right or wrong. Accordingly, they take the decision. But as of now, there is no such situation. Depending after this, what will happen, I don't know. But at the moment, there is no margin call at this stage.
Okay, Mr. Hinduja, quickly, yesterday on the call, the management alluded to the fact that the board will be meeting soon to take a call on the succession planning, whether a new CEO has to be appointed, and then consider internal, external, candidates as well for the position. As a promoter, what are your expectations on that front? Do you believe after this one-year extension, the board could still make a case for Mr. Katpalia to continue to submit that name to RBI if required, and how soon will we hear from the board?
Sorry, I'll not be able to answer this because this is not my prerogative. It is the board's prerogative, and the MD's renewal further. It all depends on his performance in the current year.
All right, Mr. Hinduja, thank you very much for sharing your thoughts with us here. And, hopefully the investors will have some notes to take away from that. So that is Ashok Hinduja, the chairman of IndusInd International Holdings, reiterating the fact that there is promoter faith in the current management, that there has been transparency, and if needed, the promoters stand ready to infuse more capital, although when that final approval from the Reserve Bank of India may come for the promoters entity to be able to hike its stake for 26% remains unclear, and also clarifying that there have been no margin calls on the pledge share or the need to create more pledge on their stake. So that is, some of the key highlights from this interview. I'm going to toss it back to our studio anchors on that note.
Ritu, thanks a lot for that. Some very important takeaways as highlighted by the promoters of IndusInd Bank. Pockets are very strong, no margin calls yet, and there is no need to create further pledged shares as well. The stock at one point was down 26%. A marginal recovery from the lows of the day, still trading with losses of 24%, which might well go down as the biggest single day drop on record for IndusInd Bank. But we call time on this edition of a Mid-Cap Radar with this very important conversation with the promoters of IndusInd Bank. News and updates continue on the other side. From Vivek and me, it's goodbye.